Quarter gone by, as well as Equitas Holdings diluting their stake in ESFBL to 53%. Great to have you on board. Healthy profit growth in Q3, and that was led by your NII as well as your asset quality improvement. Can you just tell us and highlight for us what have been the key parameters of growth and whether or not this is sustainable?
Good morning. Last year we had our demonetization effect, and because of that we had a issue in our collection in microfinance, and we did last year take a big write-off to kind of clean up the books. Subsequent to that, consistently over the last few quarters, if you see, our performance has been fairly good, and the last quarter, that's the third quarter, continues to be quite good. We had a growth in advances of about 41%. NAI grew by about 37%. Our NPA, we calculate on a daily basis compared to most others who calculate still on a month-end basis. We do our NPA calculation on a daily basis, and even under that, our NPA reduced from second to third quarter. It came down to 3.15 compared to 3.36 of the second quarter. And profits crossed 60 crores for the first time. Before we became a bank in September 2016, the June 2016 quarter, we had a profit of 60 crores. Subsequent to that, we converted into a bank, the cost of transition to a bank and the demonetization impact on microfinance, all of that put together, we never touched 60 crores again. And this is the first time that we have crossed 60 crores again after nearly a gap of 2 years. And the advance growth and the NAI growth and also the NIM, which we have been able to maintain, I think should consistently help us deliver consistent results going forward. And on our deposits and liabilities also, there has been a good traction. Our deposit has grown by nearly 1,000 crores over the third quarter, and the retail deposit has really come in very sharp growth. We did increase the interest rate on our deposit for the retail depositors in the last quarter, and that's seeing a lot of traction on the deposit growth. So overall, I think we have had a fairly good quarter last quarter.
Okay. What then is the outlook on your AUM growth, and which segments do you think are going to drive this growth going forward? And also, how do you see your mix shape up between MFI, vehicle finance as well as property finance?
So you see, our microfinance has started growing again. Last year we degrew consciously, but this year we have been growing it around 20% or so. So microfinance should continue to grow around the 20% level. Our significant growth drivers continue to be our small business loans, which are secured small business loans secured against property. That has grown by about 65% in the third quarter, and that is a segment which we are addressing, where the supply of the formal financial sector supply is very little and the demand continues to be very large. So that is one segment which will continue to drive growth for the next few years. As far as commercial vehicle finance is concerned, again that's done well. We had a 26% growth in the third quarter, and we have started doing the new light commercial vehicles. About a year back we introduced that on top of our used commercial vehicle financing, and combined together I think the vehicle finance should also continue to do well going forward. But our principal driver of growth, you could probably say, will be continue to be the small business loans, which are of secured in nature.
What has led to the improvement in your margins, and what's the outlook ahead?
See, the NIM expanded in the third quarter. If you see our yield on loans, yield on advances, that's actually increased by about nearly 40 basis points. But we also had a cost increase on the other side of nearly about 30 basis points. So more or less we have been able to pass on the increase in cost of deposit onto the lending side. But the NIM growth was more than the growth in the yield on advances, basically because our investment book reduced over the third quarter. Our non-SLR investments, we consciously kind of pruned that down, and that led to an overall improvement in the NIM. Basically, if you look at our yield on advances, more or less the growth in that is equivalent to the growth in our cost of funds. So practically we are able to kind of sustain the spread on a net basis.
Okay.